You're tied to a system that dictates the exact amount of wealth you get to keep, the assets you're allowed to hold, and the degree of freedom you experience every single day. But consider a reality where you unbundle your entire life. You sever the invisible chains binding your income, your business, and your lifestyle to one single government. This isn't some abstract fantasy. This is a tested, objective, financial framework utilized by the elite to step outside the trap of the modern nation-state. When you earn money, store your wealth, and lay your head down to sleep all within the borders of one single jurisdiction, you hand that government total leverage over your future. They can raise your taxes, freeze your accounts, or restrict your movement at a moment's notice. The strategy to break that leverage is called flag theory. Introduced in the 1960s by financial strategist Harry Schultz, the theory proposes planting different parts of your existence in different countries to maximize freedom and minimize sovereign risk. The core premise is brilliant in its simplicity. Go where you're treated best. Over the decades, authors like W.G. Hill expanded this concept into the framework of the perpetual traveler, a person who arranges their affairs so no single authority claims them as a primary subject. While the system later evolved to include 5 or even 7 flags, the undeniable foundation still rests on 3 crucial pillars. First, a second passport, or a tax haven residency. Second, a business base. Third, an offshore asset vault. Today, we dissect these 3 foundational flags. We explore how planting your citizenship, your cash flow, and your savings across 3 separate nations shields you from government overreach and scales your wealth. By the end of this session, you'll grasp the exact methods modern investors use to turn the map of the world into an unparalleled financial tool. Does the soil where you happen to sleep have an inherent right to siphon away half of what you put into your bank account? The first step to untethering your life is securing legal residency, or a second passport in a jurisdiction that imposes 0 tax on foreign income. Let's construct a thought experiment to illustrate this mechanic. Imagine you generate $200,000 a year working from your laptop as a digital nomad or global consultant. If your legal tax residency remains in California, London, or Sydney, an enormous chunk of that capital vanishes to fund domestic programs before you even manage to buy a cup of coffee. Now pick up that laptop and establish your tax residency in Dubai, Panama, or the Cayman Islands. Under territorial tax systems or 0 tax regimes, your personal income tax rate plummets to absolute 0. You keep every single cent. This is the sheer power of planting your residency flag. For most citizens of the world, severing tax ties requires establishing physical presence in a new nation and dropping your old tax home. But if you hold a passport from the United States, you face a unique beast called citizenship-based taxation. The American government taxes your global income regardless of where you happen to live. However, you can utilize a complex financial mechanic known as the Foreign Earned Income Exclusion, often referred to as the FEIE. Let's translate this into another scenario. Imagine you hold an American passport, but you relocate to an apartment in Lisbon, Portugal for an entire year. For the tax year 2024, the Internal Revenue Service allows you to exclude up to $126,500 of your earned income from federal taxes. To achieve this, you must pass the physical presence test, meaning you spend 330 full days outside the United States, or you must prove you're a bona fide resident of that foreign nation. You shield a massive portion of your active income from the tax net, giving you the runway to compound your capital faster than your peers back home. Planting this first flag means establishing formal, legal ties in a country that respects your wealth creation. Programs like digital nomad visas, golden visas, or citizenship by investment programs offer documented paths to distance yourself from high-tax jurisdictions. The payoff is monumental. You eliminate or drastically reduce the single largest expense of your entire life. You take back control of your personal income. Your business is a distinct legal entity, so why force it to live in the same high-tax neighborhood as your physical body? Your second flag concerns your active income generation. You might spend your mornings walking the beaches in Bali or drinking espresso in Rome, But your corporate entity should reside in a jurisdiction built explicitly for frictionless commerce. This flag focuses on minimizing corporate tax, stripping away compliance headaches, and accessing top-tier global payment processors. Think about the separation of powers. Forcing your company to endure the same localized burdens as you is a strategic error. Let's visualize the mechanics. Suppose you run a software as a service company, an e-commerce brand, or a consulting agency. If you incorporate that business in a high-tax nation like France or Australia, your profit margins suffer immense taxation, and the regulatory compliance acts like a labyrinth designed to drain your energy. Instead, you plant your business flag in a forward-thinking jurisdiction like Singapore, Hong Kong, or the state of Wyoming in the United States. Singapore, for instance, operates as an ideal corporate haven. It boasts a brilliant legal framework based on common law, a skilled workforce, and most importantly, it doesn't tax capital gains or foreign-sourced income that remains outside its borders. You establish a limited liability company or an equivalent corporate structure in one of these pro-business environments. By separating your business jurisdiction from your personal tax residency, you build a legal firewall. Your company generates wealth in a zone engineered for maximum profitability. Then, your company distributes those profits as dividends to you, the individual, resting in your zero tax residency flag. You optimize your cash flow on both ends of the spectrum. The corporate flag pays little to no tax on the active income, and the personal flag pays no tax on the received dividends. Furthermore, you shield your operational capital from the intrusive reach of your home government, ensuring that random lawsuits directed at your personal life don't shatter your business infrastructure. The payoff is a resilient, streamlined cash generation engine that operates 24 hours a day, unaffected by the political whims of the country where you rest your head. Earning substantial wealth is a pointless endeavor if a single stroke of a pen by a politician can wipe it out. Where do you store the treasure you fought so hard to accumulate? The third flag is the asset haven. This is the geographical location where you park your capital. The golden rule of the asset flag is simple and non-negotiable. You never keep your accumulated wealth in the same country where you live, nor do you keep it in the same country where you run your business. If a frivolous lawsuit strikes your company, or your resident country experiences a sovereign debt crisis and imposes emergency wealth taxes, your stored capital must remain untouched and inaccessible to those domestic authorities. Let's explore a vivid thought experiment to grasp the weight of this strategy. Imagine keeping your entire life savings in a local bank in a volatile economy, only to wake up on a Tuesday morning and discover the government-instituted capital controls. Your accounts are frozen. You're allowed to withdraw a meager $100 a day. Your wealth is trapped. Now imagine a different scenario. You hold your wealth across multiple fortified jurisdictions. You maintain private bank accounts in Switzerland or Liechtenstein. You hold physical gold stored in private, non-bank vaults in Singapore. You isolate your net worth from domestic turbulence. To go even further, modern investors utilize complex mechanics like real estate investment trusts, or REITs, and decentralized finance, known as DeFi. Let's break these down. Imagine you want to own real estate to hedge against inflation, but buying a physical house in your resident country ties you down and exposes you to local property taxes and market crashes. Instead, you buy shares in a real estate investment trust based in a stable offshore jurisdiction. This trust pools investor capital to own and manage commercial properties around the globe. You earn steady rental income in the form of dividends without ever dealing with a broken pipe, a troublesome tenant, or registering a property in your own name. Your real estate wealth becomes liquid, portable, and jurisdictionally detached. Then there's the frontier of decentralized finance. DeFi acts as a borderless, permissionless vault. Imagine converting a portion of your wealth into stable digital assets and staking them in a liquidity pool on a blockchain. You earn interest on your capital, much like a traditional bank, but there's no central bank holding the keys and no board of directors dictating policy. Smart contracts act as your automated, unbribable bank teller. You access this vault from anywhere on Earth with a simple internet connection and a private cryptographic key. No government can freeze a decentralized network. No single nation can seize an asset that exists purely on a globally distributed ledger. For traditional fiat currency, planting your asset flag means seeking countries with legendary banking privacy laws, immense capital reserves, and decades of unwavering economic stability. This flag guarantees that no matter what chaos unfolds in your business jurisdiction or your physical home, your financial foundation remains absolute. The ultimate realization of flag theory is understanding that borders are nothing more than invisible lines drawn on a map by people who came before you. You possess the power to decide which of those lines serve your goals and which ones hold you back. By strategically placing your personal residency, your corporate cash flow, and your asset vaults across 3 distinct and separate countries, you transform your wealth from a stationary target into a diversified global fortress. You insulate your life from sovereign risk. You ensure that no single entity dictates your financial destiny. The system exists to reward those who take the time to learn the rules of the board. But planting these flags requires a precise understanding of how to establish the right legal entities, offshore trusts, and corporate firewalls. To see the exact methods the world's elite use to build these complex structures without ever crossing legal boundaries, click the video on your screen titled "How the Wealthy Structure Global Assets to Avoid Taxes Legally."